Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're going to be talking about a company that I just bumped up in my portfolio. We're going to be talking about Kimberly-Clark. Now, I just made a change in my portfolio, and as you see on Monday, I made a $120 purchase, $119.16 to be exact. And out of that, $19.16 of that was dividend, so that was just leftover cash flow from my other investments, and I put nearly all of it into Kimberly-Clark. So in this video, I'll go over why I did that, how it affects my portfolio as a whole, and why I'm a believer in this company going into 2021 and into the future. So thank you guys so much for tuning in, and if you're not familiar with me, my name is Jordan. I'm the Millennial Investor, and what I do is I track my annual and monthly dividend income through these top two charts right here. And as you can see, we're now approaching $300+ worth of annual dividend income, and we're having steady dividend income every month as well. And then I also track my portfolio value and my monthly YouTube income through these two charts. If you'd like to see my 24 stocks in my portfolio, this will go ahead and show you right here. You can pause the video anytime, including Kimberly-Clark right there. But these are the 24 companies that I currently own, and these are all dividend-paying stocks. And the brokerage that I'm buying this on is M1 Finance. This is the brokerage right here. And M1 Finance is a cool platform that is absolutely free to use. They have some awesome features, and we've referred 72 people to the platform. And how we did that is we put my referral link down in the description. So if you're watching this video right now and you want to get signed up, you can get $30. That's right, $30 just for getting signed up and get started with your portfolio. And all you got to do is use this link down below in the description. So if you sign up, deposit $100 to the platform, $30 for you. And if you want to invest in my portfolio yourself, this link is also shared down below as well as lots of other things, including auto savings accounts, credit card referrals, and lots of other things like that. But let's go ahead and get started, and let's look into Kimberly-Clark, and let's talk about the company that I lowered to increase my position for with Kimberly-Clark. Kimberly-Clark is now 5% of my portfolio. I'm currently down on it. About 12.37% is what I'm down on it. And I currently own about 3 1/3 shares. And I own it at an average price of $138.69. And as of today, it trades at $131.01. Now, this company has had a big downturn in late 2020 and early 2021. It was trading around 160, and now that's all the way down to 130. And this gives it a lot more value as an investor, as $30 a share downward from that previous high is a lot more attractive at this valuation, in my opinion. Now, I'm about to go over some of my main reasons why I'm increasing my position in this company, but the reason why I'm doing that is for a lot of different reasons, including the very high yield, the very low PE ratio, their very soon to be increasing dividend payout. But to do this, I had to lower a position in my portfolio, because with M1 Finance, you got to have 100% invested. So that means if I take one up, Kimberly-Clark in this case, that means I also have to take one down. So the company that I took down, I decided to take down a percentage in Caterpillar. We are up massively on this company, so I'd like to focus less capital towards Caterpillar and focus more on companies like Kimberly-Clark that are undervalued. We are currently up 82.13% on a money-weighted return, and we are up $119.11 when you factor in dividends and market gain. And we also have a dividend payment coming from them in, I believe, a week or two. But if we scroll down here, you can see that I currently own almost 2 shares of Caterpillar. I have an average cost basis, over here, average cost basis of $133.13, and it is currently trading at $192. So the fact that it's trading at $192 right now, and I own it at $133, so probably somewhere around here, let's go ahead and go to the year chart. Trading at $192, and I own it right around this level, right around $133, right around this area. So it's went up a lot from my average share price, and that includes me increasing my position and averaging up a lot. So when I started buying this company, it was originally in the 110s and the 120s, and it was offering a great yield, and it had a lot of value on a PE ratio basis. But now that the company has had a lot of upwards revisions, a lot of analysts have turned recently bullish on this company, and the outlook for the fiscal year 2021, 2022 has started to go up massively, and investors are getting excited. Now, the good part is that means for me as an investor, I've made a lot of return on my money. I've invested in this company at 133, and it now trades at 192, so that means I have a lot of profit. But those of you that watch me know that I am focused on cash flow. I'm focused on dividends. So what I would like to see is this company go back to the 160s, the 150s, the 140s, whatever the case may be. I would love to see this company go down. And so far in 2020 and going into 2021, it's been nothing but up, up, and away for this company. Non-stop in the green, hitting new all-time highs. And for that, as me as an investor, that makes me less excited about them as a company. Now, I will say, one of the main reasons why I increased my position in Kimberly-Clark and lowered my position in Caterpillar is because the PE ratio. When I look at the 2021 PE ratio, those of you that don't know, PE ratios, you want those to be as low as possible. The lower that those numbers are, the more value you're getting for your money. So a lower number means a good thing. The number for the PE ratio for 2021 for Caterpillar is 25.66, okay? And then the Kimberly-Clark 2021 PE ratio is 16.87. Now in this market, when we look at the average stock in the stock market, well, let's just look at the S&P 500. Last time I checked, I believe the average company is trading around a 33 or 32, something like that. So finding companies that are in the 20s are already hard to do. But finding companies that are under 20, in this case in the 16s, is incredible. And when you're talking about a company that has an incredible track record of 100 years plus, have been raising its dividend for the last couple of decades, and has an incredible yield and opportunity, and is a sustainable company, when you can buy this at a 17 PE ratio, I just have to increase my position in it. I'm not going to do this, but if someone told me tomorrow I had to make 15% of my portfolio into Kimberly-Clark, I would sleep just fine at night because I'm not worried about this company failing, and I'm not worried about anything that it has to do. Now, Caterpillar, there's nothing against it. This is some of the bullet points for their corporate profile. They have a lot going for them. I want to let you know that even though I did decrease my position in them, that does not mean that I sold any shares. I just lowered my target percentage. So that's why, as you see here, my target, this bold number 3 right here, my target is 3%. But I currently have 3.9% of my portfolio in it. So basically all this means is that the shares that I own right now, I'll continue holding. These shares that I own at, what was it, 133? Yeah. These shares that I own at 133, I'll continue to hold on to them. I'm not selling out of anything, but as I hold on to them, a lot of my future deposits in the next couple of months are not going to really focus so much on buying Caterpillar. The only way I'm going to buy this company heavily again is if we see a massive downturn, which I don't think is likely over the next couple of months. But as we go on and as we finish up with Caterpillar, there's a lot of good points about this company. I still want to own them. This is still a long-term hold, a long-term buy with me. And this is some of their bullet points and you're interested, including all the massive brands that they had, including heavy machinery and the massive profitability that they have globally, worldwide, through all their products with construction equipment, mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel electric locomotives. But with all these type of products that they have to offer, it's an incredible company. I'm glad to own it at still 3% of my portfolio, but it's just not offering the value that Kimberly-Clark can offer right now here going into the beginning of 2021. But let's go ahead and close out of these tabs, and let's go ahead and look at Kimberly-Clark, because Kimberly-Clark is one of the companies that I'm most excited about owning as an investor on this entire list, because it's very safe, it's very defensive, and in the case of a pandemic, this is a company that actually benefits from a pandemic. That's part of the reasons why you're seeing all-time highs in the mid and the late 2020, and this company did not get hit that hard during 2020 compared to the average market. It went from about 145 and it only went down to about 115. So not a huge downturn considering comparing it to other companies out there. When you compare this to a lot of other companies, like a lot of higher growth tech companies, it really didn't get hit nearly as hard as a lot of its other peers. So when I started buying this company, I was buying it around 140. I was buying this company in the 140s is when I originally started purchasing it. And I was buying it even in the 150s, the 160s. And now that it's went down back to the 130s, back before its pre-pandemic levels, these are some of the same prices that you could have bought this company going all the way back to 2015, 2016. So incredible value there. And in that time, we'll go ahead and look at some of the financials for the company. But first, before we do that, I want to go ahead and talk about what the company does, what the company is, and how they're looking for growing in the next decade or two. Now, if you see here, we have their trusted brands, and we're about to go over all those brands in just a minute. But as you can see, basically, this company is the dominating leader in basic paper products, including wipes and paper towels and toilet paper and Kleenex and lots of other things like that. So what we're going to do is we're going to look at some of the bullet points and some of the brands behind this company. They're in 175 different countries. 175 different countries. So this company has a global footprint, and nearly 1/4 of the world population uses a Kimberly-Clark product every single day. So definitely a large footprint for this company. And if we look at their adult care section, and by the way, I should mention they have their products split into 4 or 5 different categories, but in their adult care section, they have their Depend, Poise, and Plenitude, if I say that right, Plenitude brand. In their baby and child care, you're going to see some very popular brand. You've probably seen a lot of commercials to these products every single day. They have Huggies, Pull-Ups, Good Nights, Dry Nights, Huggies Little Swimmers, Clean BB, and Green Finger. Next up, we have the family care section. They have the #1 brand in tissues, in my opinion. They have Kleenex, they have Andrex, they have Hackle, they have Cottonelle, they have Scottex, they have Page, they have Neve, they have Petalo, they have Wondersoft, they have Tila, they have Scott, they have Viva. So I don't know about you guys, but I'll tell you for me personally, Viva, Scott, Cottonelle, Andrex, and Kleenex. I can name 5 of those brands that I knew all growing up throughout my household. I saw all 5 of these brands every single day. Feminine care products, they have You by Kotex, they have Kotex White, Kotex Any Days, Kotex Goodfill, and then they have Antimus and Camellia, I guess is how you say those names. A lot of these are also foreign brands, as you can tell, so a lot of these are kind of hard to pronounce, but you get the point. This company has a lot of different brands, and as they expand their company, you look at some of these professional brands that they have as well, including like Wipeall, Kimtech, CleanGuard. A lot of these brands are brands that you probably use every single day because, like it said, 1/4 of the global population uses one of their products every single day, and that's why this company's been around since 1872, so an extremely long time. So what I wanted to show is how this company is looking at growing forward, because I know a lot of companies like this that are massive blue chip dividend stocks, they have a tough time growing. They're so large, they're so dominant, they have so many footprints around the world globally that it's hard for them to grow really fast. And a company like this is a company like Coca-Cola or Pepsi. It's probably only going to grow its company by about 2, 3, 4% every single year. So I wanted to show this 2020 fact sheet, and it really goes over how they intend on growing into 2022. So this company is definitely forward looking. So its strategy for 2022 is balanced, sustainable growth. So it plans on growing its sales in organic sales at 1 to 3%, about what I'm expecting. Increase earnings per share to mid-single digits. That's what I want to see as a dividend investor. This tab out of these number 4 little bullet points, these little bubbles right here, this second one that I just highlighted, increase mid-single digits of earnings per share. That is what's most important to me as a dividend investor, as well as tab number 1. Number 3 is to at least maintain top tier ROIC. And then number 4 is to generally increase the dividend in line with the earnings per share, which is also extremely important for me as a dividend investor, and there's some of their brands right there. Now, as we go into their 2022 strategy highlights, I want to show some of the products that they have to offer and some of the things that they're looking to do to grow their capital, increase their profits. The main thing that they're going to do is grow their portfolio of iconic brands. So when you look at this, Cottonelle, Huggies, Scott, Kleenex, a lot of these brands are already very dominant in their field. A lot of people use their products without even considering other brands out there. So what they're going to do is they're going to continue to use those main brands and to increase their revenues and increase their profits. And their 2 main primary growth pillars are to alleviate their core businesses in developed markets and accelerate growth in D&E markets. We will pursue these pillars by driving category development, particularly in D&E markets, and by leveraging and investing in our commercial capabilities in revenue management, innovation, and digital marketing and sales execution. They're going to leverage cost and financial discipline. They're going to continually focus on the financials and leverage their way into more profitability going into 2021, and then allocate capital in value creating ways. And I think this is really important. As they come out with new products and new brands, they have to find offers to increase value for new shareholders, for new customers. So as they come out with new products and new ways to increase revenues, this is going to offer you more value as a shareholder. And as we scroll down here, you'll see some of their financial highlights. I won't go over this one by one, but I think it's important to look at some of these bullet points because I'm about to go over some of the financials for this company. And as you can see, some of the main things that I want to focus on here is their earnings per share and their dividend payout ratio. You can see their earnings per share, their EPS, is very, very, very important for me as a dividend investor. And this increased in 2016, it increased in 2017, increased in 2018, increased in 2019, and these numbers have not been updated yet for 2020 because those have not came out yet, the last quarter of 2020, but in 2020 it did increase as well with about $7 worth of EPS. And then their dividend payout ratio based on earnings per share has actually decreased as their earnings per share has increased. So that is incredible for me as an investor. As they increase their earnings, their dividend payout is not even being budged as they increase their dividend payout as well. Their dividend payout ratio was 61%, 62, 61, and then 2019 it finished with 60%. And I think it's probably even below 60 as we go into 2020 because of the massive uproar they had in toilet paper due to the pandemic shutdowns and lots of other things as well. But they also do repurchase shares. That's not something that I focus on too heavily as a dividend investor, but it is nice to know that they are returning capital to their shareholders as well through the form of share repurchases in the spectrum of $800 million. So that is very good as an investor. Now, as we look into 2017 through 2019, if we look at their consolidated income statement on their annual report, the revenue has pretty much been flat going from 2017 to 2019, and 2020 has been the only really uproar we've seen due to the pandemic. But it went from 18.3 billion, 18.4, and then stayed 18.4 in 2019. So not a whole lot of growth there. And that's why you've seen this company and share price recently trend downwards. That's why it went from the 160s down to the 130s, because in the last couple of years, this company has hardly moved at all. It's pretty much the same price that it was 5 years ago. But me as a dividend investor, this is what I like to see. I like to see companies that are not moving quickly, just slowly and steady uptrend, but more importantly, increase that dividend payout every single year. So I think as an investor, as this company temporarily has a slow downturn while they don't grow a whole lot, but they increase that dividend payout, which by the way, they're due for a dividend raise here, I believe, next month. So not only is this dividend yield already really high, but it's about to increase dramatically here in the next month or so. But they went from 92 cents a quarter up to 97 to a dollar to a dollar 03 to a dollar 07, and now they're looking at increasing it again. And me as an investor, not only on a PE ratio basis, a sustainability basis, and a dividend yield basis, I think that this company offers a lot of value. But thank you guys so much for watching all the way at the end. If you're interested in buying Kimberly-Clark, go ahead and use M1 Finance to do it. Like I said, it's a free service. You'll get $30 just for getting signed up, and all you got to do is use this link down below in the description. But thank you guys so much for watching, and I'll catch you guys next time.